Okay, so for today, we are going to answer additional exercises on short problems for financial ratio. So you may refer to your manual. So this is problem 6 on your manual. So before we proceed, what would be your answer for the first question here? What would be the net sales for 2000B? Okay, what would be your answer? How much is the net sales? Net sales. Okay, so considering in the problem there are cash sales and the given is more on the accounts receivable, so you will have the idea that um, why is it they're going to ask pa the net sales when there's already given for the cash sales. So therefore, there would be part of the net sales which are on credit. So we need to solve the credit portion of the sales and add that to the um, existing cash sales to get the net sales. Okay. So how much would be the net sales? Remember, the net sales is not only composed of your um, cash sales, but would also include your credit sales. Okay, so how do we get the credit portion, credit sales na portion? Okay, so you can use here the formula for the, what formula can we use here in the problem? To solve for the credit sales. So we can use the formula for the, okay, you can compute for the, so given here is the RTO. So therefore, we can use the formula for RTO to solve for the problem. So what's the formula for the RTO? That is credit sales over average AR. Okay, so how do we get the average AR? So we're going to sum up the beginning and the ending AR and then divide it by 2. So that's 8,000 plus 96, then divide by 2. So that is 8,800. Okay, so therefore, 5 times equals your credit sales. Okay, credit sales. Okay, sorry. Okay, again, so you have your RTO is 5 equals your credit sales over your average AR. So we have computed it earlier. That's 8,800. And then cross multiply. So therefore, your credit sales is equivalent to, okay, 88. That's 44,000. But is this the final answer? Remember that you still have your cash sales. So therefore, your total sales or your net sales will be equivalent to the sum of your cash and your credit sales, because our sales, diba, the net sales is not only for cash but also includes your credit sales. And on the other hand, your net sales is not only composed of the credit sales, but it also includes your cash sales. So therefore, you're going to add your cash sales. So this would be 47,200. Okay, so that would be your total net sales for the year. If ever there are also mga returns, so of course net sales should be net of the returns and then the discounts. But since this is only the provided information, so we're going to compute it based lang sa given. question number 2. What is the debt ratio? What are your answers? Kindly answer it in the chat box. Okay, so what is given here? You have the equity multiplier, then it's financed with combination of debt and equity. So what would be the uh, debt ratio? Okay, so the problem only provides for the equity multiplier. And what is the formula for the equity multiplier? So that is equivalent to your total assets average, total assets over your average total equity or average equity. So if the equity multiplier is 2.4, that means 2.4 is to 1. So therefore, your total assets is represented by 2.4 and your equity is represented by this 1. So therefore, for every 1 peso of equity, there is 2.4 total assets. So therefore, if the equity is 1 peso um, in contrast with your total assets, so what would be the portion of your debt? Remember the accounting equation, asset is equal to your debt or your liabilities plus equity. So therefore, if your asset is 2.4 and your equity is 1, therefore, how much is your um, liability? So therefore, your liability would be equal to 1.4. Okay. So therefore, what is our debt to equity ratio? Sorry, debt ratio. Debt ratio, not debt to equity. So what is our debt ratio? So the formula for debt ratio is your total debt over your total assets. So if our liabilities or the debt, this is your total debt, is 1.4 and we divide it by the total assets, which is 2.4, therefore that would be 58.33%. Okay, so let's check your answers. Okay, so you got the correct answer. Very good. Question number 3. What is the market to book ratio? So Alessandra has 10 billion total assets, 1 billion current liabilities, 3 billion long-term debt, and 6 billion equity with 800 million shares of common stock outstanding with stock price of 32 per share. So what are your answers? Okay. So we need to compute the market to book ratio, and what is the formula? So market to book ratio is equivalent to your market price per share over your book value per share. So i-abbreviate lang nato or acronym. So what is our market price per share? So is it given in the problem? You have the stock price. So that is our market price. And divide it by the book value per share. So how do we compute the book value per share? So even in intermediate accounting, you can refer to the intermediate accounting books. To compute the book value of the share, you need to reduce first the equity and only compute what is for common equity. So, common equity ra iyahang focus. So, in the problem, since the common equity is given, so you have 6 billion and then the number of shares, ordinary shares only. So, you have 6 billion divided by 800 million. Okay. So, therefore, that is 7.5 per share. So, that is in peso. Okay, so therefore, 32 divided by 7.5. Okay, so that is 4.27. So this means that for every one book value per share or peso, every peso of book value per share, the price is 4.27. So it's much higher. So the market value of your shares is much higher than the book value. Okay. So your answers are correct. Very good. Let's proceed to number 4. What is the price earnings ratio if the EPS is 2 and the book value per share is 20 and market to book ratio is 1.2 times? What are your answers? Okay, so what is the formula for price earnings ratio? So price earnings ratio is the difference between your market price per share divided by EPS. Okay, so the market price per share is not given, so we need to derive the market price per share. But can we derive the market price per share here? So what are the given ratios? So you have EPS, and then we have book value per share and market to book ratio. So we have this market to book ratio. And what is the formula for market to book ratio? So that's market price per share over book value per share. And this is equivalent to 1.2. And the market price per share is not given, but your book value per share is given. So therefore, we can extract the market price per share. So the book value per share is 20, and then you have the market price per share. So cross multiply. So you have your market price per share is equivalent to 20 times 1.2, that is 24. So therefore, 24 over your EPS of 2, so this is 12. Okay, so let's check your answers. Okay, so you got the correct answer. Next question, number 5. What is the ROE? Okay, what are your answers? Okay, so what is the formula for the ROE? So your ROE is computed as returns or your net income divided by your average equity or your equity. So the given here is the profit margin, equity multiplier, and then sales, then total asset. So how can we derive the necessary nga information here? So you have we have the profit margin of 3% and you have the sales. So to get your net income, you can multiply your profit margin by your sales. Okay, because the profit margin here is the ratio of your net income to your sales. So if your profit margin is 3% and then your sales is 200 million, therefore, what is our net income? So 200 times 3%, so this is 6 million. And what is our equity here? So to get your equity, you have your equity multiplier. Then you have your total assets, average total assets over your equity. And then this is 2.5 equals your assets is 150 million. And then you have your equity. And then cross multiply. So your equity here would be 150 divided by 2.5. So you have 60 million. Okay, so 6 over 60 million, this would be 10%. Okay, let's check your answers. Okay, so those are correct. Question number 6, what is the equity multiplier? What are your answers? Okay, so where do we start? So the equity multiplier is equivalent to assets over equity, or average total assets over equity. Okay, and aside from that, you have the total assets turnover. Okay, the first requirement there is the total asset turnover. How about your total asset turnover? What is your total assets turnover? Tato. Okay, so what's the formula for your total assets turnover? So that's your net sales over your total assets. Okay, what is your total asset turnover here? Okay. Is it in percentage? Because if you're going to answer 3.33%, so that's 0.033. If you're going to convert that into a ano lang, plain digit. Remember the turnover is how many times. So it's not in percentage form. Okay. So how will we get the total assets turnover? So we can use the given data here. So you have, uh, okay, which question is this? Question number, okay. So you have return on equity, and we have ROA, and then the profit margin. Okay, so the ROA, remember how do we compute the ROA? That's equivalent to net income over your assets or total assets. But you can break the formula, diba? You can break the formula into net income over sales, and then you multiply it with sales over assets. Wherein this portion, okay, this one is your tato, diba? And this portion here is your profit margin. Therefore, since given man si ROA, okay, since given si ROA, so the ROA is 10%, and then equals, the profit margin is also given, that is 3%. So therefore, we can derive the tato. Okay. So how much would be the tato here? So multiply, so that's 0.03. So that's 10%, then equals 3% of tato. Then extract now the tato, total asset turnover. So that's, since this is 3%, so 10% divided by 3%. So that would be 3.33%. So you need to be careful when you are extracting the answers, because it's not all the time that you're going to convert that to percentage. It depends on the question. If it asks for a ratio, you can answer it as 2:1. That's permissible. Or you can put, but most likely if that's a ratio, there should be is 2 man gyud na siya. Or pwede ra pod siya if that is simply 2:1. So that would be 2 or 200 percent. If you're going to convert that to percent. Again, kung ratio siya, usually na siya is 2. 2:1. If you're going to convert that into percentage, that would be 200%. But this one, since this is turnover, you can still convert this to percentage, but it's not 3.33%. If this is a percentage, then this would be multiplied by 100. So that's 333% if you're going to convert that to percent. But if it's a turnover, usually nga nila siya, dili na siya i-percent na to. So we already know our tato here. So we can now compute your equity multiplier. So we have already the answer for the total asset turnover. For the equity multiplier, okay, that is equivalent to assets over equity. But how do we get the equity multiplier? We can use the formula, the expanded formula for your ROE. Remember the DuPont formula. Okay, sa DuPont, that is still ROE, katong DuPont. But it breaks your, di ba supposed to be that's net income over equity. But it is expanded. So net income over sales times sales over total assets times total assets over equity. Okay, so it's expanded. Again, this one is your profit margin. This is your tato. And this is your equity multiplier. So since we already know the profit margin and the tato, we can now compute the equity multiplier. So therefore, your equity multiplier here is equal to, you start with the ROE, it's given 20% equals your profit margin of 3% times 3.33 times your equity multiplier. So you can now extract this one. So you have 3% times 3.33, 3 times 3.33. So this is 0.0999. Actually, if you're going to round this off, this is already 10%. Then 20%. Then, okay, so this one, we will convert this one to 10%. Because actually, if we did not round this off, so if you multiply it immediately, that would be 10%. So our equity multiplier is 20 divided by 10. So that would be, okay, sorry, 20 divided by 0.10, 0.20 divided by 0.10, that would be 2. Okay, so let's check your answers earlier. So you already have your answers. That was 2. Okay, that's correct. Next question, question number 7. What is our debt ratio? What's our debt ratio here? We have first question there, profit margin, and then we have the debt ratio. Okay, so answers for debt ratio is 50%. How about the profit margin? Okay, so it has the same situation with the previous problem. So there's sales over total assets. So that this is your uh, TATO. Okay, and then we have your ROA, and then you have your ROE. Okay, so your total assets turnover is 2.5. So ROE, profit margins, or ask for the profit margin. So you can start with, okay, which one can you compute first? So the ROA is given. That's the shorter form. ROA is your net income over your assets, but if we want to extract your profit margin, then we're going to use the expanded form, this one. So you have the net income over sales times sales over asset. Why is it that we're using this one, ma'am, when we have the formula for net income over assets? Because we need to extract this one, and this is one of the composition to get your ROA. So this is your profit margin. Mama na siya si profit margin. So since the ROA is given, so you have 2% equals your profit margin, and the TATO is given 2.5. So therefore, okay, 2.5, our profit margin is equivalent to, okay, 2%. Okay, what is our profit margin here? What are your answers for the profit margin? Okay, that's, we have to be careful in our, multiplication and getting the answers. Okay, what is the answer for the profit margin? In percentage. How do we convert that in percentage? Is it 0.8, 0.8%, 0.08%? Which one is the correct profit margin? We need to do the basics in converting to percentage. Is it 8%? 0.8%? If you're going to use the decimal, confusing how to convert. Okay? So this is, okay, step by step na to. So, di ba, this is 2.5 PM. Profit margin equals 2%. Okay, so di ba, divide na to siya, divide by 2.5. So this is PM. Okay, for a while. Okay, PM is equal to 2%. Okay, I hang up. 2% over 2.5. Okay. How do you compute that? 0.02 divided by 2.5. And what will come out? 0.008. That is in decimal form. Okay. So therefore, if your answer earlier is 0.08, then that is wrong. 0.08 nga without percent, ha? 0.08 without the percent, that's wrong because in decimal, that should be 0.008. But how do you convert that to percentage? Okay, recall your lesson in business math. How you convert from decimal to percentage? You simply multiply that by 100. Okay, 100 in your calculator. So this is, in percentage, this is 0.8%. Okay, so therefore you have to be very careful in converting. Okay, if your previous answer is zero point 0.8 decimal, that's wrong. Because if that is in percentage, that is 80%. Okay, if your answer was zero point zero 0.08 in decimal, 0.08 in decimal, that's also wrong. Diba? Because that is 8% in percentage. Okay? 0.008, if you convert that to percentage, you need to multiply by 100. That's the very simplest way, okay, how to convert. Okay? Or, if you want the mano-mano, okay, the manual, okay, again, if you can record your business math, because this one is a lesson in business math. So I taught business math before. To convert this into percentage without multiplying or without using your calculator, you just move to decimal places, diba? Okay, this one. So therefore, 0.8%. Because percent means per 100. That's why we multiply that with 100 to get the percentage. So percent, uh, 0.8 kada 100. Okay, so the answer for the profit margin is, again, 0.8%. Usually, if you're asked with the margin, profit margin, you need to use the percentage because this one, magunaw na pa copy naman ni, di ba? So, kani siya, mas easier man to understand that per 100, 0.8 siya. Per 100 of sales, 0.8 ang profit. Okay? So, gamay kaayo. Next, what is our debt ratio? Okay, so our debt ratio, so you can now use the, okay, so what is required? You have the debt ratio. What is our debt ratio here? What are your answers for the debt ratio earlier? Let's check. Okay, your answer is 0.50. Okay, so how do we get your debt ratio? Okay, what formula can we use? So you have your profit margin is given, and then you have, okay, you need to get your equity multiplier to determine the debt ratio. Okay, so how much is our equity multiplier here? So since the ROE is given, how much is our ROE? 4%. Okay, ROE. And then your profit margin is already computed. So you have 0.008, okay, times, what is our tato? That is 2.5. Then times equity multiplier. And this is equivalent to how much is our ROE? 4%. So multiply 2.5 times 0.008. This is 0.02. What I do if I answer problems like this, no, I do not convert it sometimes immediately to percentage. For example, this one, I do not convert it in percentage, or I do not use 0.8%. Okay. I may be confused later on in the final answer if this is already in the percentage form or this is still in decimal. So I prefer that I use the decimal form first and then convert it later to decimal. So 0.02 times the equity multiplier equals the 4%, so 0.04. Pero pwede naman po niya siya nga sa calcul na ninyo ibutang tong 0.04. But if I input it in the calcul, I don't use the percentage like, di ba pwede to siya 4%, 4, and then you click the percent sign. So, I usually do is, in decimal gid siya, 0.04 divided by, and so on. Yan na. So, since this one is 0.02 EM, so this is divided by 0.02. So, 0.04 divided by 0.02. So, our equity multiplier is, okay, 2. So, remember the equity multiplier, sa man na siyang equity multiplier, that is your total assets over equity. Okay, equity multipliers total assets over equity. So if this is 2, this means that that is 2 is to 1. For every 1 peso of equity, there is 2 pesos assets. So kung balihon, di ba, what is our debt ratio? Kung balihon na nimo na siya, so that's equity over total assets. But for the debt ratio in, the debt ratio is equivalent to debt over total assets. So if your equity is 1, what is the portion of your debt? 2 minus 1 is 1. Okay, so therefore that's 1 over total asset is 2. So therefore that's 0.5 or 50%. Okay, again, since this is ratio, so 0.5 is to 1 or pwede na 0.5. Okay, but you cannot use 0.5%. That's a different answer. It's not the answer. If you're going to use decimal, so you have to be sure nga mo gina siya 0.5 or 0.50 or 0.50 is to 1. But if you're going to use it as a percentage, you have to multiply by 100, so that's 50%. Okay. Okay. So, be careful gid aning percentage ha. O decimal. If it is in decimal, again, if mga ratios gani siya, debt ratio, so may mga ano dire, rates ang requirement. Cash ratio, current ratio, you can use the decimal. So, for example, 5 ang answer, 5 is to 1. Yan na, or 5, pwede na na siya. If the question is all about profit margin, operating margin, usually percentage ang better nga presentation, or mga ROA, ROE, usually ano siya in percentage. Dividend payout ratio, better if it's decimal in answer or in ratio like 3 is to 1, 2 is to 1. If it is a turnover, that's times. So, decimal na siya. So, 4.2 times. Yan na. Then, if it's an average collection period, yan na, it's in days. Okay, so be careful yun sa mga rates.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.